Porinju Veliyath, the MD and Portfolio Manager, Equity Intelligence India, joins us on the show right now. Porinju, hi, good morning. Chatting with you after Diwali. Lots has happened. From 10,500, we are just about struggling at 10,100. Is there any concern on the street that we should be worried of, or would you say this is just routine profit taking going on in the market?
This is, as you rightly pointed out, this is a routine profit taking. And nowadays, markets are very efficient. And not only efficient, I feel it's very healthy because of the frequent corrections in the market, which takes away the over leverage in the market, in general. And plus, that complacency of the traders get rectified. So that way, equity market in India right now is very healthy. It is not a bubble. And we will continue to move forward. But investors should not expect Nifty to go up every day 50 points and forever. Doesn't happen that way. So these kind of ups and downs and corrections keep the market healthy, a healthy ground for stock pickers. So stock picking is the game, even though it's relevant at any point of time. And as I told earlier, today India is at an inflection point. Our economy is undergoing structural changes, unprecedented, which is very much required also. So, and the politics is changing. Everything is changing in this country for positive. We have got a strong leader. See, I have been not talking about the leadership for some time, but people should not forget a strong leadership is very important for this country. When I say leader, I'm not giving credit to anybody in particular, but we have a strong leader today who want to do things with commitment and, who is a very intelligent guy. So that's very important. So I think overall things are looking very comfortable for equity investors, and the kind of structural changes what happened, including the demonetization or GST and all the allied activities or reforms or the action by the government, basically to bring down corruption, thereby to bring down poverty over a period of time. And this will make India richer, and the Indians, the income levels will go up. And we can never forget, this magic figure which I normally talk about, 1,300 million people country. That's very important. Investors should never forget the implication, the significance of this number, especially in an environment where the income of Indians are going up.
Okay. How much of the good news of economic recovery, great demographic advantages, the fact that we have a rate of changes in the price, because Porinju, let's be clear here, earnings have not picked up and stock markets have gone up 50% ever since Prime Minister Modi picked up. Individual stocks are up more than 5 to 10x. So I agree and I endorse the thesis which you are painting, and we are in a unique and advantageous position. But stock pricing is also about understanding what is in the price and what is not in the price.
Yeah, 5% of that is already done. 95% remains.
I'm sorry.
5% of that is done.
5% of that is done. Oh wow! So you mean?
That's what you asked me.
Yeah. So you mean to say that mega gains and big appreciation still lies ahead of us?
Yeah, for next 10 years. It will take 10 years to you get a good feeling of that. All the reforms going on, its implications, impact on companies, corporate earnings, on the economy, on the poverty, on the social structure of the country. A lot of things are going to happen, and everything is related. Don't feel that investors should not feel that equity investing is just so much secluded. You look at the market, you look at the charts, and you buy stocks and sell. That's a very lower end activity. Real investors, long-term investors who want to create wealth by investing in equities or by investing for others in equities, they should look at a lot of things: the politics, the social structure, the changing landscape of the economy, the structural changes, how the corporate world is changing, how the frauds and the scams coming down, how the corruption is, whether it is coming down or not, to what extent. So there are n number of factors to consider if you are a smart investor. There is nothing like a stock picking. Just look at the market every day. That's not stock picking. So everything is related in this aspect. Many people are missing that big picture, Niguns. That's why they are, I had recently was talking about the market structure, current composition of the market players or the market participants. We have 10% bulls at this point of time, gone changing. And we have 20% bears and 70% monkeys in the market. So this is an opportunity basically for the first 10%.
No, absolutely. And in that hunt for value, Porinju, I just wanted to, I mean, we will of course talk about some of the interesting themes that you like in the market right now, how you're, wanting to perhaps believe that the IPO market is, has run its course. But do you find value in PSU Banks? I mean, for somebody who has avoided that space for a while, do you think all the policy measures, and you've spoken about how the government has been quite proactive in bringing out the right policies, do you think that this policy change will get the PSU banks going, and would you be a buyer?
I will not be doing anything in PSU banks because I have better things to do in life. So I would like to ignore because there is no clarity. Even though I might have taken some stand in the past, the short-term basis on the valuations, but on an investment perspective, we have investors have much better things to do.
Okay, let's talk about a stock which we've discussed in the past, and the stock is now the fancy of the market, Tata Global Beverages. I looked at the numbers which I think came on Monday or Tuesday. Numbers were not that great, but from 170 to 230 or 240, it's been a one-way ride for Tata Global Beverages. So what is the theme here? Are markets betting on increase in green tea consumption, herbal tea consumption, or Starbucks?
No, in Tata Global Beverages, it was just the undervaluation is just getting rectified. Nothing else is happening. At 120.25, it was wrongly priced for the same fundamentals, and now that is rectified because the stock was identified, or some large institutional sellers have stopped selling. So it has come to normal levels. So I remember very clearly. This was one of the big picture companies when we discussed on it a year ago. The price used to be 120.25, and even Tata Coffee also looking good at these levels, though it has not taken part much like Tata Global Beverages. We are holding in both the companies in PMS, so I want to very specifically give it as a disclaimer. So see, there are many such stories. Actually, Nikunj, if you see the last 1 year, most of that interesting wealth creation has happened outside the Sensex or outside the Nifty. Those who have been index investors or following the Nifty and Sensex, I think they have all the reasons to be disappointed in India, because the big money is made outside that. How many stocks have gone 5 times and 10 times in the last 365 days? Do you know that? A very large number. So that is what I have been exactly talking in the last 2 years. Look at the mid caps and small caps in India, where there is a turnaround potential, or where there is a symptom of turnaround, or a symptom of promoters stopping siphoning out money, a symptom of deleveraging, a symptom of the business turning around. There are a lot of things, ingredients, where you can look at such some interesting, relevant businesses quoting like penny stocks in the market. We had a lot of them. I was very convinced. If you remember, I have been repeatedly talking about this aspect, and it's happening now. A lot of them have really run up, but at the same time, some companies come into the fancy. And they have gone beyond the fundamentals also. So investors have to be careful. You have to see, some of the stocks going 5 times and 10 times without enough fundamental support. So that maybe operators are still active in the market. Now the number of operators have gone from earlier we used to have 5-6 operators, in 90s or later. Today we have 500 and 600 kind of operators in the medium levels. They try to manage the stock price, many other aspects. So investors should be careful about overvaluation also, and look at unidentified stocks. Still, that's a theme for India, for the smart stock pickers out there. There are a lot of opportunities.
Right. And the one such opportunity, Porinju, that you did spot a while back was HSIL. What's the story here?
HSIL, I have been always, used to wonder. The stock used to be at 700, 800 crores market cap. The industry leader in this country, and an industry in the infancy itself. So I used to be surprised. Now it has come to some 3,000 crores market cap. I think HSIL has still a long way to go. See the products and product profile. A lot of things are happening now. They are demerging the brand and distribution business, and it's a very large business. It used to be underpriced or mispriced earlier. Now it is coming near. I think this stock can even double from here in the next 1-2 years' time. The stock price is around 450, 3,300 crores market capitalization. And I want to disclose that we are holding it in PMS.
You also have a 5% holding in GVK. Run us through the rationale there, and are you going to be looking at increasing stake even more?
Yeah, my stake is now around 6.5%.
Okay, so you have increased stake of late.
Yeah, last time when I went to Mumbai, I was waiting for the flight in the lobby. So I was telling my wife I own 3% of Mumbai airport. So it's something interesting, very nice to think about. See, there are leveraged infra companies and with less leverage infra companies. Infrastructure is definitely a theme and a story going forward. So here GVK is a company with leverage. If you see the consolidated balance sheet, there is huge debt. Now it is interpreted as 15,000 crores debt, or some other accounting, it is 25,000 crores, which is more, but this 15,000 crores is more relevant. On the other side, this company has got very interesting assets and futuristic. And once they come out of this over-leveraged mess and the Australian coal mine liabilities, and the management has very clearly indicated in the last AGM about the plans and the methods or the ways how to come out of the over-leverage or the coming back to a strong balance sheet. Once it happens, and if it happens, I don't want to make it a 100% sure bet. One thing I'll tell you, Tanvir, see, markets have come to rich valuations. There's no doubt about it in general. So if you really want to make big money, the multi-baggers, you have to take some risk.
And is DCM Shriram one such risk that you're willing to take?
No, DCM Shriram, the problem is it's a risk-free company. But still I love it. I have been buying in portfolio management from 50 rupees, DCM Shriram Limited. It used to be earlier known as DCM Shriram Consolidated. And the stock has really come up, and it has come, I think, 10 times. And still, I like the company. We are still holding in portfolio management.
Porinju, we always tend to ask you, what have you bought new? Naya kya liya? What is the new thing you are buying? Let me phrase it differently. What have you not sold from last 3 years? And since you're talking about 10 years, which is one stock or two stocks you say that, look, I'm happy, I've been owning it from last 3 years, I'm happy to own it for another 5 years. What has not changed for you?
As a fund, taking pride in holding for a long time is not, what I do. I am trying to maximize the return. So that is possible only when you do some reasonable kind of churning, considering the market structure of India. Because we are emerging economy, and it is very dynamically managed now, and very dynamic things are happening in the stock market, in the investment, in the companies, because the turnaround of companies, which I have been talking about last 2-3 years. So that's where now when I was buying at 10 rupees, future consumer, which we discussed at least 10 times on 80 now, I think I was like the only buyer in the market. We had a significant stake, and future consumer is the biggest ever money made in our portfolio management. To be very frank, we booked most of the profits. We are still holding some. At 60 plus, it's a 6-timer. So that's how we have to do it. That's how we could even the last we just analyzed the last 7 months performance of the portfolio management. So it is something like 38% absolute return in 7 months.
Right. Porinju, in fact, on the future group of companies, would you believe that if somebody was holding a future retail today, that it's time to book profits there as well, because the stock has run up so much?
I prefer not to comment on that because I'm not excited at these levels, because I get excited when companies are at an inflection point. It's a deep value, and it's not discovered well. But these companies can still be compounders. Now, another thing, Tanvir, plentiful ideas of multi-baggers. We are coming out of that golden period in the last 2-3 years. We had it. So now people have to be focusing, especially the conservative investors have to focus on compounders. Where you can make 25-30% compounding for next 5 years and 10 years. That kind of stories are immense in India. But whereas you'll find, but rarely it can come as a luck. Sometimes you may come across multi-bagger potential companies, and that multi-bagger ultimately it evolves. We don't know when we pick the stocks whether it's a multi-bagger or not. So there are a lot of companies. Now GVK, I won't recommend to somebody to just go and blindly buy it. So, but I feel if there are symptoms in the company of deleveraging, and the industry, has a huge advantageous position at this point of time when we look forward, and their capability for execution, and they have already proven their mettle. So I think this kind of companies are there, but I have some percentage of our portfolio management. We don't mind betting on such leveraged companies with a calculated risk. So I think it's there is no hard and fast rules for investing. First of all, you have to keep your eyes and ears open, and you have to be okay. The company is leveraged. I won't touch it.
Right.
And I won't touch it.
Okay. Let me ask you a very hard question. You're a great stock picker, okay? So my question to you is, give me a Nifty 50 stock which you think can be a multi-bagger in making. Come on, give it a shot.
It's very difficult. Very difficult. I don't see any to be very good. And I'm not. You ask me to name stocks in the Nifty. I think I may not be in a position to talk it more than 15, 20 stocks. I'm not keeping so much awareness about the Nifty stocks. I know there's a lot of, the Nifty composition. There are a lot of finance banking companies, a lot of pharmaceutical companies, a lot of IT companies. I'm not very bullish on these segments going forward in general. There could be companies which can still give you 20, 25% CAGR. But so this is the biggest challenge for Nifty. The composition, I would say, I don't agree with the composition of Nifty. Trying to project India through the
Porinju, I'm curious to ask you, what would the Nifty composition, according to you, be like? What is the stock that you would like included in the Nifty, and what would you want deleted?
Oh no, I can't name anything, but because the Nifty people who are managing Nifty also has their limitations. We have certain set criterions, the size, the floating stock, the size of business, various factors. So, but I am not blaming Nifty as it is. But what I am trying to tell investors, look beyond Nifty. That's where the big money is.
Okay. All right, Porinju, we'll let you go at that. Thanks very much. It's always been a very enriching discussion. Thanks very much once again for joining us today and helping our viewers understand the markets at these levels and helping them with hunting value in the markets right now.